Hey guys, welcome back to this YouTube channel. If you already haven't, definitely subscribe. Today we're going to talk about how to journal on TradingView, and we're not just going to talk about the trading aspect of it, but pretty much everything I do in a day. We're going to talk about what should be on your trading journal, how to review it, how to improve your hit rate from it, basically lose less and extract more profits, and how to collect data. So make sure you stay to the end. Every piece is important. Now, I know you guys' time's valuable, so I am gonna try to be right to the point and not keep you here any longer than I have to. But before I start, a funny story. I just recorded this video and I recorded the wrong screen, and I thought it was the best video I ever made, and yeah, I'm pretty much remaking it now. So yeah, let's try this again, guys. Okay, so I'm just gonna keep things brief and to the point. And if you guys have any more questions at the end of this, feel free to reach out. You can comment or, reach out to me on Instagram, or you can just look in the description. There's ways to get a hold of me. So first off is I use higher time frame. Actually, before that, market conditions. So we have consolidating market conditions and trending market conditions. Right now, this is trending. We're in a pullback phase. The next thing I have is higher time frame direction. So this so when the market's trending, higher time frame to me is daily, and then I have mid time frame direction, and this for me is 1 hour. So 1 hour and 15 minute pretty much act as my guide for day trading. Everything below that is to fine tune, refine, and basically work on entry models. Just looking at this right off the bat, so this is the first part of my analysis. Now, I can tell right here that we are bullish. We're trending in the past 2 weeks or so, maybe about 8 to 10 trading days. We have been in a bearish pullback phase. So one of two things is going to happen. The highest probability is that we keep selling. Continuations work more often than reversals. At some point, this is going to turn bullish again, and we will keep buying. So in this particular case, I picked a day where I took a sell from December. I picked an area where price could reverse just to kind of show you how to build off the journaling aspect. Now, I actually can't do much more on this time frame, so let's just check the 1 hour time frame. Okay, so here I took out a daily high. This is a somewhere in here on the lower time frame would be a lit zone. For those of you that aren't familiar with that, they're reactive areas for us in our system, kind of like, I guess you could call it some sort of a order block or whatever system you guys trade. Okay, so I'm just looking at this, we're pushing down. So my expectation is to continue down. Price hasn't really violated any highs. That's expectation one. Expectation two is this actually holds and this reaction is true, and that confirms we're going up. There's two ways to do that. First way is this level holds, and the second way is my lit zone here holds. So essentially, One of these zones got to hold. My invalidation point for this lit zone is this low. So basically, just pretend that's an order block or support and resistance, whatever. That's the invalidation point. So what this means for me is because we're in a unique area where price could reverse, I don't have a long-term sell. I could target the bottom. Continuations work more often than reversals. So at this point, it would still make sense to continue selling. However, if one of these levels starts holding and going sideways, I know the potential for a reversal is pretty high. So, I'm just going to show you a short I took, and then we're going to purposely just randomly go take some random trades and losses and show you how to refine those as data. And I'll show you guys how to do this. And for those of you that don't know, you want to create a new template on TradingView just for your trades. So create a new layout, call it whatever your trades, make sure autosave's on, and don't do anything else on this chart but journal. So for me, this would be daily lit hit, possible reversal. Now bias is, higher time frame bias is sells. Mid time frame is sells, and possible daily ortho realignment zone. So I know at some point we're going to turn bullish, so this is kind of the bias, so that goes there right away. So for me, essentially, I just need to find a entry model that works for me. So we push down, we throw up a wick. This is liquidity. So if that gets swept, I can look for an entry. So essentially, I can go down and just wait. And this is actually an exact trade I actually took. Okay, so vector candles in, bearish engulfing, pullback. I like to see a pullback and a break. So that's a pullback. That's a break confirmed. So essentially, I can put a limit on half of this second range. And because it's pretty small, so that's 3.7 pips, add a pip for good luck. As long as it meets 3R criteria, which this is close enough, I can take this trade. So price comes back, taps me in, and this one runs to target pretty quick. So here I would write 15-minute Q wick entry, and here I would write vectors in, bearish engulfing, target lit, which is my first reactive zone, obviously. And another day, I'll show you a couple of scenarios too, where the journaling might look a bit different. The next thing I would say is that plan was followed, and that's it. Nothing too crazy. I keep it pretty light. This is just in the direction of the daily push, so you can kind of see how my story's put together. Very simple. I will say something, and you'll want to do this. Go to visibility, and you actually want to turn this stuff off so it doesn't appear on anything but 1 to 15 minutes. The reason I do this is when I go back and I look at like a month of journaling, sometimes I just want to see what the hourly or the 4 hour to daily looks like. And if you don't do that, you're going to have about 10,000 of these bubbles pop up. So definitely limit the visibility. That's a personal preference of mine. You don't have to do it, but I find it easier. Okay, so now this is past PA. I know price reverses here, but what we're gonna end up doing here is pretend that we're stubborn and we just took a trade anyway. So let's just say price hits 50, we'll execute. Price hit 50, maybe first bearish. Maybe there's something better on the 1 minute. Anyway, irrelevant. And we're just gonna say we're going for the daily low. And maybe cover a bit more. So, in this case, I would rate continuation of order flow and target daily low, range, rebalance, entry. So really simple. We're just gonna go lose this trade. I know this trade loses because it reverses here. So you can see here our let zone holds. So now we made 3R and we lost 1R. So how does that look? So when I come back to reassess my day, my goal is how do I extract more profits out of the market? Well, it's letting your winners run when the room's there, and it's getting out of a position when it's no longer in your favor. So the number one pattern for reversals is sideways price action, right? So instead of losing this trade, what could have I done here? Well, I have a couple ways. So on the 1 minute, if 3 ranges are made against me, I'll just break even. Chances are price is going to go through my stop loss. That statistically worked for me. The other way of managing for me is if I'm at an area of possible reversal and I see sideways price action, it's a bad place to hold risk. So just break even. So I would go back now and I would be like, PA went sideways, should have broke even, but didn't. Whoops. My spelling's just horrible. Okay. So, long story short, we ended up with 2R on the day instead of 3R. So this is 1 day. So I review my journal daily. If for some reason I don't review it that day, I'll review 2 days the following day. And then I do like a weekly overview on Friday to see what's going on. Did I have my bias wrong? Did I have my market conditions wrong? Was I getting lost in the lower time frame? Because sometimes I start with the right bias on the daily and the 1 hour, and then I get lost on the 5 and the 15 minute, and I start going the wrong way. It happens. You get hypnotized. So this is the next part of journaling that I'm going to talk to you about, and it's how to analyze and how to lose less and how to extract more profits. Now this is probably the more important part that a lot of people don't do, because what I see a lot of people do is they'll put the trade tool on and they'll be like, whatever, it hit my support and I bought, and it hit my demand and I bought, or it hit my supply and I sold with a chalk or whatever. But nobody goes back and reviews and breaks down how they could have lost less. So here I showed you how I could have turned this loss into a break even. So let's find a couple examples of things that maybe I could improve on. So this would be a good day here. So let's pretend I found something on the lower time frame and I shorted this, but then I closed the trade here, so I ended up with like almost 2R. I would come back and I would be like, well, what could have been done different? Well, if we analyze this whole day, not a single high has been violated. Every low has been taken out. So it's pretty safe to say that the higher time frame order flow will likely take this out. Now, instead of this 2R, is there a way to extract more profits without adding more risk? When I say without adding more risk, I mean without opening another position. Sure, we hold to the low. Now, this itself can be done really smart or really poor. So the way to do it is, for myself, take risk off as soon as you can. So we'll say break even here. Break even. So no more risk. Maybe here, let's do 50% off. So this secures profits. And then the remainder hits TP. So now leave remainder to daily low. So what my journal would look like for this day is I will actually come put this trade on the chart. I'm kind of doing this backwards actually. So what it would actually look like is I would have what should have happened on the chart. And what I'll do at the end too is after I'm done what should have happened and what could have happened, a lot of times I'll delete the trade tool, but I'll leave the bubbles. If you want to keep the trade tool or the bubbles on, what you could do is change your bubbles colors and trade tool colors for what should have happened versus what happened. Now, I could go back and write notes such as no highs have been violated, safe to hold to daily low. So on this particular day, it would have been safe enough to hold to the daily low, whereas on another day, like the day that we just did, where we're at a possible reversal area, going for the daily low is not that high probability, so it was not that kind of day. So with this being said, I would go back and do this, and then let's say we took another trade down here, and we're just gonna say, I don't know, maybe we thought it was just gonna continue, and we'll just call this a pure greed trade. So with no logic, plan not followed. So it's important to go back and describe what happened. Is this a greed trade because you just had whatever couple of big trades or one big trade and you thought you could make more? You decided not to leave the market and instead you gave back some of your profits. Okay. Entry was poor. Okay. Late in the session and during New York lunch. Okay. All against the plan. Out of timings, and you would just write everything you did. So that would be another example. So then I would go back and I would assess at what time am I making mistakes. So have I been at the charts for maybe 4 hours or too long? Have I maybe taken 2 losses and I had low sleep? So let's say maybe only had 4 hours sleep, and I journaled this stuff, only had 4 hours sleep, or I took 2 really bad losses that were not part of the plan. So then the last trade I FOMO'd, and I would write all these reasons down. So you can see where we're getting into now. Before we were talking about the technical analysis. If it's like a news trade, I'll write the fundamental reason in. But then there's the other part of it. I'm like, okay, well, was I lacking sleep? Am I continuously lacking sleep? Why am I lacking sleep? Did the kids keep me up? Is my boss working me too hard? Am I watching Netflix too late? So now you reverse engineer that and be like, oh, I'm watching 3 hours of Netflix a day. Maybe I could reduce that to 1 hour and get more sleep so I can perform better in the market. And eventually, if you journal what you were feeling, what you were thinking, what happened during the trades, why you think you lost, and what the actual statistic data was, well, I don't know. I traded all of London and all of New York without a break. I've been at the charts for 9 hours. Okay, well, maybe it's a good idea to trade for 3 hours, take a couple hour break, come back for 3 hours, and give yourself a break. And all of these are data points you use to refine how do I make less mistakes. So until these mistakes are made and you have this data, you actually won't know what to change. In the moment, I can be like, oh yeah, I was tired. Maybe I need more sleep. But by the time Friday rolls around and I look at all 5 days, I'm not going to remember I was tired on Monday. I'm not going to remember I was pissed off at Joe on Tuesday and that's what I was thinking about during trading or whatever the case may be. But it's important to jot this stuff down. Now you can go back. Okay, I need more sleep. Okay, don't talk to Joe till after my trading day's done. Okay, I got triggered by an Instagram post and tried to pull off a trade that wasn't even part of my plan. Okay, don't look at Instagram until after trading's done. So then we're just gonna, again, go back. No, let's take a few losses here. Now, obviously, price is going down here. You likely wouldn't buy here, but we're just going to pretend that we bought here and we lost here, and we took 3 losses in a row. Was it safe to say that all of these losses are too close together in the same direction from the same area? Yeah. So I would write something like, no patience. Losses too close together in the same area. Wait for more confluences. All losses in the same direction. So this is now telling me there's a directional issue. When there's a directional issue, it's not going to come off the 5 minute. It's going to come off the hourly and the daily, because essentially the 5 minute, the 1 minute, the 15 minute, it's nothing more than a directional realignment of whatever your higher time frame's doing, as long as the market's trending. Now, if the market's moving sideways, then the 5-15 minutes is going to be your best friend, because let's be honest, the daily and the hourly candles sometimes don't produce enough data in small ranges. So, all conditions specific, right? But this would be another example of what happened. So now I would go back and be like, okay, well, what could have told me that direction maybe could have been better that day? Well, we're just gonna, for the sake of this example, I don't know what system you guys trade, but to make it more relative, we're going to pretend you hit a big demand zone where price should have reversed and maybe demand didn't hold and price went through. So you would go back and you would write whatever demand didn't hold, support didn't hold, resistance didn't hold, whatever the case would be. But then I would go back and be like, okay, well, what was I doing buying in the first place? Look at the size of the bearish candles. How many highs have we violated? Well, not many. We liquidated one and used it for liquidity. Aside from that, we haven't violated any highs. Okay, well, would it be safe to say that maybe I got lost in the smaller time frame? Perhaps. And, and I don't know what you guys' entry models are. Maybe you've seen whatever bosses and chalks and fair value gaps and whatever you use. It really doesn't matter what you use. The important thing is that you have the data of what worked and what didn't. Okay, well, this entry works more often than not. Good entry model. This entry model usually fails even when I got my direction right. Bad entry model. And it all goes back to the more data you can have, the more you can improve. So it doesn't matter what system you trade, who's your mentor, what books you read, what courses you took. This is the part of trading that you have to do to improve regardless of what system you trade. So you have some tools in your trading. You have back testing, you have analyzing, you have reverse engineering PA, You have journaling, and then you have reviewing your journal. These are all tools. You have to use these tools. You have to go back. You have to collect the data. So for me, I use FX Replay to backtest, but even when I backtest, I will still go back and I'll be like, okay, well, what did I do wrong on this day? Oh, I could have maybe broke even once instead of losing once. Okay, well, here maybe I could have held for an extra hour. The move was there. Whatever the case may be. So I will actually go back and I'll break down what I could have did better. Because if you don't do that, you're going to continue making the same mistakes over and over. And we're essentially trying to catch these mistakes, make less of them. And the less mistakes you make, the more of a habit it becomes. Eventually it'll be like, oh, there's my execution model. I'm just going to hit sell. And you hit sell before you even realize why you hit sell, because it's become a habit because this model works. So that's the part of trading that we want to get to, is where it's a habit. You're no longer forcing it. You're not looking at your notebook and being like, okay, well, there's my 19 confluences to enter. Oh no, the trade's gone. So that's part of the purpose. So higher time frame analysis, mid time frame analysis, entry reason, targeting reason, any management reasons for every trade. And if you can do that and you can reverse engineer how to make less mistakes, I promise you that 6 months from now, your trading is going to 10x. We've had a lot of people come and go through the community. I've mentored a lot of people, and what I can tell you is almost nobody journals, and the guys that do journal don't go back and review them, don't analyze. And this goes for your backtesting too. That's great, you backtested. What about reviewing your backtesting to see what you could have improved on? Because nobody knows where you're making mistakes but you. But even you won't know where you're making mistakes if you don't go back and look at your notes. So this is the part of trading that nobody teaches. This is the part of the journey that every trader has to go through alone. I do wish more people made videos like this, and maybe they do. I don't know. I don't spend a lot of time watching people's YouTubes these days. But I did in the beginning, and some of it was helpful, some of it was not. But this is definitely something that can transform your trading. So yeah, I'm not going to keep babbling on. It's probably good that I made this the second time. You guys got a shorter version. Again, any questions, reach out to me, guys. In the description, there'll be Telegram. There'll be my website. You guys have me on Instagram. You can leave me a comment right here on YouTube. If you have any content ideas or anything you guys want, let me know what it is you're seeking. I'm willing to help out where I can. I know trading can be a tough racket, so maybe you guys can avoid some of my mistakes by listening to me. So yeah, I hope you guys enjoyed this video, and I'll see you next week's video, guys. Hope you have a great day.